Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and I'm bringing you a post-Fed breakdown. But before I get to it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe. And if you're watching from our website, there's also a link below to direct you to YouTube, and you can subscribe that way. We'd love you to follow us. We'd love you to help us build our following. All right, let's get to it. Yeah, we're seeing quite a bit of volatility here during Fed Chair Powell's press conference, and afterwards too. We've seen the equity markets extend the range higher on the session, finishing near session highs in the S&P and other indices. We saw a rally in the Treasury market, the 30-year bond here into the electronic close, trading to new session highs, up more than 1.5 points. Now on the prices are rallying, the yields are coming down. That means the 10-year is off in the session by about 17 basis points, down to about 4.76. The 2-year is back below 5%, down about 13 basis points on the day. We're seeing the dollar index give away most of its gains, about 0.5% off session highs. The euro regaining a bulk of the session losses on the day. And there's a lot of volatility still to come here on the week, but here are the big takeaways from Fed Chair Powell's press conference. Over the year, he's talked about the risks of doing too much versus too little, and he's talking about that being very balanced now. I think that was the real key here on the session that really signified that this is a more dovish tone from Fed Chair Powell. He also talked about wage increases coming down significantly over the last 18 months, and that the range of estimates for the neutral rate are now is restrictive, and we're within that range of the neutral rate. So I think overall, if you're taking away what he was talking about here, the real takeaway is his tone was more dovish, and he took opportunities to speak more upbeat about being closer to the end game, and really signaling that we're going to see them pause unless some of the data comes in much hotter than anticipated here over the coming weeks. And a lot of data is still to come. I mean, just to come this week, we got more jobless claims tomorrow. Unit labor costs as well tomorrow. Big numbers there. In the payroll number, of course, on Friday. Non-farm payroll coming on Friday. A lot there. Takeaway even from the Eurozone. German jobs tomorrow. The Bank of England tomorrow as well. So a lot of volatility. And let's not forget, Apple earnings after the bell tomorrow. And, earnings have been a big story here for the equity markets today. AMD up nearly 10%. Qualcomm after the bell up 4 to 5%. The NASDAQ, big day, biggest day since August 29th, up 250 some points here on the E-mini NASDAQ futures. So again, a big day, but here are the levels. As we go into tomorrow, we're not quite at resistance, but there is some pretty crucial rare major 4-star resistance levels. I see overhead 42.75 in the E-mini S&P futures, as well as that 14.825 in the E-mini NASDAQ futures. So keep an eye on that. If we start getting decisively out above there, through the end of the week, after jobs number on Friday on a weekly closing basis, that could really signal here that we're at the start of a big seasonal rally. So I'm looking for that as we head into the end of the week with all this data and more earnings to come, and then obviously to finish off with jobs. But I'm also watching these treasuries very closely. I am long the 2-year prices, 2-year futures in my commodity trading advisor, my CTA that I run. I've obviously Stanley Druckenmiller, a big hedge fund manager, something he talked about yesterday in an interview. So or this week. So there is some belief here that the rates are topping out, at least the short end of the curve. Keep a close eye on that. Could be a big tailwind to the risk environment. Also, I'm seeing in the futures, the 2-year futures, a inverse head and shoulders. So keep an eye on that as well. But again, a lot of volatility as the day unfolds. I think if I would take away anything that disappointed me here today, it's the metals. I mean, gold and silver, given what the dollar did, given what rates did in the second half of the session here after Fed Chair Powell, it's really a little disappointing not to see gold back above 2,000. Obviously, some war premium in there right now, and it's really kind of working through and digesting that at the moment. But a pretty decent floor is developing for now, at least 1965, 1975 in gold. Keep an eye on that. And our team is always here to help. Remember, futures trading involves substantial risk of loss. It is not suitable for all investors.